Thank you, Claudia. Hello, everyone. I'm Prop Pichandi. I head the Global CDO Strategic Initiatives for Banking, Financial Services, and Insurance for TCS. It's a pleasure to be with you all today, and I'm joined by my colleague Ganesh. Ganesh, if you can, please.
Yeah, hi, thanks, Prab. Thanks, Claudia. Good morning, good afternoon, everyone. This is Ganesh Ramachandran. I'm based out of Singapore. I head the finance technology portfolio within Standard Chartered Bank, primarily focused on data reporting and capital and tax solutions. Happy to be part of this session and look forward to the next 30 minutes. Welcome, everyone. Over to you, Prab.
Thank you, Ganesh. I'm really glad to be with you, Ganesh. Having discussed with you, I find you yourself to be a great data enthusiast and someone who's really passionate about data and how data can transform the business. And you bring in a huge amount of vast business experience to the power of data. Thank you for your leadership in space, and I'm glad to have share the stage with you today. Once again, pleasure to be all with you. Before I begin, I just wanted to mention a couple of things. We have posted 2 poll questions, very simple questions. I would really appreciate if you can just have a quick look at it and vote for the same. Also, during the session, feel free to either post your question in the chat, or if you want to unmute and ask the question, we'll give you a chance for that. I will try my best to multitask and look at the questions as well. So with that, let me begin with a small point of view, and then I will ask a question to Ganesh. Over the last year, financial services have been adapting to the new normal, increasing the resiliency of the organization, adapting to remote working options, and increasing the focus on digitalization, data, and cloud. We in TCS have conducted a cross-industry survey of business executives across Asia, Europe, and North America to uncover how their companies have fared during the pandemic and the strategy for recovery in the emerging competitive landscape. We found that the companies that have embraced digital transformation, very importantly, in a wholehearted manner, were further away in responding to the pandemic in a more successful manner, and also responding to the subsequent economic downturn. Also, they were able to, or they're looking forward to a faster rebound and also poised to prosper in the long term. In our analysis, we found 6 critical capabilities, as you can see on this slide, which are essential, that has been an essential element for these companies to move forward, and also essentials in the future. As you can see, digital customer experience, AI-driven analytics, driven by data, and enterprise systems on cloud, automated business processes, digital ecosystem partnership, and also leveraging the digital senses. These are some of the key capabilities that we believe the companies have gained to help themselves to be ahead of the game. We also found some other interesting facts. As you can see, I don't intend to go through in detail, but some key findings in this survey that we had conducted from TCS. Around 25%, a quarter of the organization have invested pretty well in their analytics, especially in the advanced analytics, leveraging AI and data. And a similar number also have invested on their cloud. Now, today's focus is on data and data analytics, which is one of the critical foundational elements and also critical capabilities that underpinning this. So with that, I would like to turn to Ganesh and ask this question. What has, in your view, Ganesh, what has the financial services done well during this last 1-year period? Or what capabilities that augured well for financial services, especially for yourself, Ganesh? Over to you.
Okay. A couple of things there, perhaps. See, one thing I think most people would agree with me when it comes to banks or financial services, and banks in particular are slow to embrace technology or adopt cutting edge, newer technology and so on. I think to most people's surprise, including myself, when the whole pandemic hit and then people were actually locked up at their own places, I thought work will come to a standstill. But the resiliency with which most businesses actually just sprang back, and particularly banks, it was actually just really amazing. The infrastructure were upgraded at jet fast speed. People were able to actually just thousands of employees were able to actually just connect from home and continue doing business, continue supporting their clients and so on, which was fantastic. Leaving the infrastructure part aside, I think one other thing which came through this pandemic was a whole lot of, actually, there was a lot of unknowns, actually. Nobody would have predicted, actually, end of 2020 or around Christmas, we would all be actually just in such a situation. So there was a lot of scenarios that were to be actually comprehended or actually forecast and modeled to figure out actually just how the business would cope. Financial services did really well in terms of harnessing their data, coming up with actually just very insightful analysis, just quickly actually adapting to this whole changing landscape, which was completely unprecedented. To me, was a big one, actually. And in fact, the regulators also started coming up with a lot of requests around how the health of the organization is financially, and are we adequately covered, and so on, which required a lot of analytics capabilities, access to significant amount of quality data. I think years of investing in actually data platforms and AI tools and analytics tools rather actually came in very handy for financial services industry, in my view.
Thank you, Ganesh. It makes absolute sense in terms of how the scenario modeling and meeting the regulators' needs in this dynamic and volatile environment is very critical. And this modeling is also, of course, from a financial services point of view, it's critical. And also cross-industry modeling, how do you leverage data from across the industry to help in this scenario modeling? And it has actually been accelerated during this pandemic. Thank you for that. So I just wanted to go to the next question. We are seeing a paradigm shift in the way the customers are investing in data. As you can see on the left-hand side of this diagram, in today's world, if you look at the investments that goes into the data initiatives, predominant amount of investments is going into gathering information and analysis and preparation of data, and very less into creation of inferences and insights. What we believe the future is inversion of this triangle, as you can see here, whereby you bring in automation into the data processing side, and thus you can invert the triangle towards less effort on a more automated way of data preparation and analysis, and more effort spent on inferences and insights. Ganesh, what is your view on where the industry is and where you are in this journey?
Yeah, I think it's an interesting paradigm that you have shown out here. I think the recent 12, 24 months time, if you look at it, actually, most people have actually just realized this subconsciously, maybe over years of experience. We are very much in this actually just transformation. There's a number of things. Suddenly, there is an increased focus on how do you automate. Historically, for various reasons, we've ended up in a very federated architecture. Most banks, most financial services industries across the industry, you will find this spaghetti bowl if you ask for an enterprise architecture diagram, right? So, and now people are realizing that, okay, this data is the new oil, as they say. It's become cliche now. Just that you have data, access to lots of data, but how do you actually just make data work for you? I think that's where more investments are going in actually automating. Just look for straight through processing. And then I think the last 3-4 years, actually, there's a significant advent of newer technology solutions, which has actually shifted the whole paradigm of actually moving data to tools. Instead, actually move the tools to data. You have data sitting everywhere, and actually, how can you have a single platform or an analytics platform which actually plugs into all your data, makes some sense out of it, and then help you actually come up with a lot of insights. In fact, that one aspect has actually just accelerated the paradigm shift, as you stated here, significantly in my view. And we at Standard Chartered are actually right in this journey. Actually, in fact, my next part of my presentation is going to touch a bit on that. So it's an interesting evolution, and I think it's very good to be part of this journey as we see.
Thank you, Ganesh. Yes, indeed. How to make data work for you, as you mentioned, is very critical. And in this journey, there are various different elements. There are complexities in the data estate. And you look to how to demystify the complexity and simplify the complexity. And we have seen various approaches, right? From metadata-driven architectures, having business glossaries, having lineages, as well as we have seen different approaches when it comes to the core data solutions as well, Ganesh. Enterprise data lake versus a regional or functional level, like data stores and data lakes at a risk and finance level. Different use cases warrants different types of adaptation and patterns, which is understandable. I just want to get your experience, Ganesh, in terms of this data strategy, this data journey towards inverting the triangle. If you can explain the initiatives that you have successfully, or you are in the journey of this data transformation initiative in the finance domain. If you can just add more light to that, please.
Sure, not a problem. There's a couple of things that I would actually just call out before we jump into this slide that you see on screen. Standard Chartered has been actually a big proponent of actually the enterprise model for data. So in the last 4 or 5 years, actually significant effort and time has been spent to actually just build an enterprise data lake, what we call as enterprise data management platform, or EDMP, which brought a whole huge volumes of actually just source system transaction data, static data, reference data, external data, all onto a central Hadoop-based platform. And on top of which actually a whole number of reporting and processing solutions were built. And we continue to actually just harvest that data. And a couple of years ago, I think 2 years ago precisely, actually, when the finance business actually commenced a huge transformation initiative, core of the objectives were primarily around simplifying the finance business processes and how do we make them operationally efficient and effective and so on. So the transformation program at its root had a straight-through processing objective, as I mentioned earlier. And we chose to go with SAP's solution offerings. I think because SAP has various modules or components which are neatly integrated with each other, starting from the general ledger. We decided to actually implement a financial product subledger, what is called as FPSL. It's one of the modules from SAP. Consolidation and business planning through the BPC module, disclosure management through the DM module of SAP. But I think the core of all of this, the underpinning aspect was establishing the financial services data platform, which is again an offering from SAP, which is fairly a newbie when you compare it with all the other SAP modules. This is a unified data model specifically built for financial services, and then caters to banks and products and the subject area based data model. And it's still evolving. When we started, we were on version 1.3. Now we are actually talking about version 1.10 or 11 or whatever. So we were one of the early adapters of this. And in fact, we are one of the largest implementation of FSDP for SAP by way of product spread and then geographical spread. So we decided to go with that. I think the fundamental drivers for actually going with this option was, one is you have access to the data lake. As I said, a whole lot of source system data is available readily. The finance landscape had actually become very complex, far too complex to actually just manage. As I mentioned earlier, like the spaghetti ball, federated data warehouses, applications doubling up as data warehouses themselves, many point-to-point connections, data inconsistencies, storage of same data in multiple warehouses, and so on. Naturally, all of this results in huge cost of actually just operating the whole thing as a unit. And more, the regulators are also actually just pushing for consistent reporting using same or similar data sets, which can be explained easily. Newer requests like COVID, actually, all of a sudden there's a steady increase of actually just demand from the regulators to see how well the bank is capitalized, are you rightly placed, and all of that. So responding to such requirements also need access to data, understandable, meaningful, quality data quickly. And how do you ensure that, okay, these are operationally, financially accurate? What levels of controls are needed? And most of these systems that we had built over the last 10, 12 years are getting technologically obsolete with the ever-increasing focus around information security and cyber risk and so on. To keep all of these applications current in itself was a huge undertaking. Combining all of these drivers, we thought that, okay, this transformation program can actually help simplify that by implementing the FSDP platform. If we can go to the next slide, please. Okay, so it's a busy slide. I wouldn't spend too much time reading through everything. In essence, actually implementing this FSDP data platform actually just simplifies the architecture, because we bring a whole lot of source system data, as I said, transaction static, customer reference data, external data, and so on, into this central data platform, which is actually unified, harmonized, and standardized. It takes away the complexity of the source systems. So as a downstream consumer of this data, I don't really need to know how the source system actually captures or stores or transmits this data. To me, it is all available in a standardized central place. And so we built a whole lot of framework around it, actually. So how do you ingest data into this data platform? How can we actually just automate the whole thing all the way from the source systems through to the downstream consumer, where the data seamlessly flows through? What levels of controls can be actually just built in, be it operational, be it financial? How do you ensure quality of data, accuracy of data? And how do you make sure that you don't have numerous systems downstream managing data quality and then posting adjustments and all of that? Shift most of those information to the left, so that if you find inconsistency in data, fix it at source. Where it is not possible, fix it at the central store at least, so that the downstreams can be actually just relieved of those complications. So we went and actually just did that. And the good thing is, for Standard Chartered, SAP was a complete new stack. So we didn't have any in-house expertise. So we really had to actually just rely a lot on SAP as a product vendor. They brought in a whole lot of consultancy to us. And then we went along with TCS to implement the FSDP data platform. As TCS again brought in a lot of SAP expertise, plus their implementation of data warehousing and through other products and so on. The combination of these two actually came in very handy for us to actually just build it. A couple of things to call out is actually, as I said, this is still an evolving product. As I said, we started off with version 1.3, and then we are talking about upgrading to the latest version. So a number of things actually we had to actually just stumble upon because no one else has actually just done that before. But that is where the engagement with SAP product development team came in very handy. So we had a feedback loop to have constant dialogue with Waldorf. And that way, actually, we were able to overcome a lot of it. We did have to go for some customization because our immediate requirements were actually in the pipeline for the product. But at least both sides knew actually why we are customizing and what we are customizing and how we can actually switch to it later. Okay, so that's at a high level, actually, this is what the platform does. If you go to the next slide, which talks about a high level architecture, I don't want to spend too much time on it actually. So pretty much all of what you see, the FSDP model layer, that's the core of FSDP, which comes out of the box. And then on the left, all the source systems for the first release that went live about 2 weeks ago, we had about 8 to 10 source systems focused primarily around capital market products, covering about 15, 16 derivative products, FX products. We mapped and modeled the whole data set and then enabled data for the subledger for these product subledgers. And then 20 odd downstream systems actually started consuming this data from this data store. And in our roadmap, actually, if you look at it, the last year and this year, we spent a lot of time laying the foundation, get this architecture up and running, complete the integration patterns and so on. Now it's a question of actually fast tracking, onboarding and provisioning data into 2021 and beyond. In the next 2 years, we plan to actually complete most of the data provisioning through this data store. Okay, if you go to the next slide, please. Okay, so this is the last slide for me, actually. I think most of it we touched earlier. I think in summary, this unified data model abstracts the complexity of the source system data structure for the downstream systems. And we are actually just going with some semantic-based outbound data models, which will actually just enable users to actually just use some business glossary, use a catalog, just come and actually take the data in. So the design is actually done that way. Given the disparate nature of all the downstream systems, we have come up with a strategic framework which will allow us to have multiple integration options. So depending on how ready the system is to APIs and more advanced integration. And to the other extreme, actually, we have a traditional file-based handoffs as well. So that's unified data model. And then we built a control framework, which actually takes care of data accuracy, provides metadata to capture the internal as data management requirements, as well as external requirements like BCBS 239. How do you maintain data lineage? How do you ensure that data is not lost in translation and so on? So we have built a control framework which takes care of all of these things. And while we don't have an immediate use case for intraday data requirement, but we've actually designed the system in such a way that we can configure it to actually perform near real time as well. Okay, so that's in a nutshell, yes, it simplifies the data landscape, adds a lot more consistency to the data, and then increasing the confidence of the data, the quality of data. And we've also seen a significant improvement in timeliness as well. I think the existing system and the new system, if we actually just compare for whatever we went live with, there is a solid 2 to 3 hours of a timeline gain on a daily basis. Okay, I'll pause here.
Thank you for a very detailed answer to this. We have another 6 minutes to go. Just wanted to encourage anyone who has a question to post it. And I also see the polls coming through, which we will discuss shortly. But before we move further and take one of the poll and then discuss that, you mentioned a few things which is very critical and important. Unified data model, especially when you have the complexity that you have, cash products and derivative products is a very critical element to make any data program successful. And you also touched upon the control framework. And I feel that this control framework is extremely critical, especially given the huge regulatory focus that is there in today's world. Heavy penalties and consent orders are being handed out. If you can just spend a minute to explain how have you implemented that and how are you able to satisfy the regulators?
Okay. We approached it on two or three layers, actually. One is purely operational. As you deal with data through the pipe, how do you ensure that you don't lose or mess up the data? So to that extent, actually, we have built in a whole lot of checks, some simple checks like a header footer checksum validations, as well as actually just reconciling uh, values pre and post. And there's a whole lot of operational controls that we have built. And we've also just built some financial controls as well between the subledger and ledger, between the data store and the subledger, and so on. And so that's on operational controls. And on business controls or data quality controls, we've also actually taken a whole lot of data requirements. Along with the data requirements, we also actually captured the DQ expectations for the downstream processes. And we couldn't build it for everything because it's we're talking about some close to 1,600 attributes for the first release itself, business attributes. So what we decided was to implement it for the critical data elements in BCBS terminologies. So we've actually taken DQ rules or expectations from the downstream, and we built it as part of our exception management framework as well. So there's a dashboard which actually just gives you quality of data, operational accuracy of the data, and so on. So these are on a runtime basis. At a design time level, actually what we've built is also capturing metadata around data lineage. How do you capture transformation, inclusion, exclusion logic, and so on. These are actually just critical BCBS requirements as well. And within the bank, we have a strong data management standards as well. So we've tried to actually embed all of these into the design time as well, so that it gets captured alongside. And we are actually exploring the possibility of managing all of these in BAU through the use of tools like Power Designer. How do you integrate that with the enterprise metadata management tool and so on? So those are actually works in progress now. But in summary, that's how we have actually laid out our control framework.
Thank you, Ganesh. Thank you. Let me just quickly look at the poll questions and answers. We had two questions. One was on the success criteria. Would you consider, how would you consider your recent data initiatives? Is that a success, or what are the challenges? So the answers is kind of split 50-50. 50% saying yes, their data initiative has been successful, and another 50% saying no. The main reason for that is quality and governance issues. And some of that, Ganesh, you had already covered in your experience. The second question is on the business outcome. How do you rate yourself in linking business KPIs to the investments in data? Because this is a question which many ask in terms of how do I measure the success of my data programs? How do I link business KPIs to investments so that there could be more investments on the data initiatives from the business? So we had few answers, and the answers are like split third each. One is excellent. We are good, excellent in defining business KPIs. The third is we ensure measurement and monitoring of KPIs consistently. And another third have answered not consistent in measurement and monitoring KPIs. So this is again a very split answer on defining the KPI. So very briefly, Ganesh, how have you gone about measuring the business outcomes in defining the KPIs? And not only defining, but also how do you go about measuring and monitoring? They say, if you can just take a minute to answer that, Ganesh, that will be helpful.
Yeah, I think it's the most difficult question actually for the day. Because when it comes to data, and if you're talking about enterprise-wide or actually across portfolio-wide, defining success is not easy. And we had to go with some proxies. Within finance, if I look at it, I think it's common in most banks that you will have tons and tons of data adjustments that are handled downstream. So if you take that as a measure, as a proxy to say that, okay, lesser number of adjustments in future would mean that, okay, your data platform is actually just taken care of a whole lot of data quality issues upfront. So I think to us, actually reducing the number of adjustments. In fact, we ran a survey as well across countries and the businesses to see how many data adjustments that they pose, and we got some surprising numbers. So our first focus is to actually see how we can reduce the adjustments. Second thing is timeliness. Because of the legacy nature of our current architecture, to get anything and everything actually takes time. Some of our reporting is actually on a T+2 basis. So our focus is to see how we can actually just cut it down to a T+1 basis as early as possible. And we, as I said, we already started seeing results wherein we are seeing 2 to 3 hours of timeline improvement straight away. And we want to actually push this even further. Interest of time, I'll actually just leave that with those two alone, Prab.
Thank you, Ganesh. Once again, I would like to thank everyone for your participation. In summary, we discussed about the importance of data and analytics in the post-COVID world, and how it plays a critical role in helping to rebound and also to helping you keep ahead among the competition. And Ganesh, thank you for explaining your experience and the beautiful framework. One slide, you said it is crowded, but actually it's a beautiful framework there, covering the unified data model, which is critical, the controls, both operational and business controls, which are critical, quality and governance, which are important, and finally defining, managing, and monitoring the business outcomes, all very critical to make your data programs a success. Once again, thank you, Ganesh, and thank you, everyone, for your participation. Have a great day.
Yeah, thanks for the opportunity, Prab, and thanks everyone for listening to us. Nice. Thank you. Have a good rest of the day.